Oil technical analysis for the upcoming October 21st session. You can see that we did have a little bit of a fall during the Thursday session, but we managed to bounce from the 85 mark and form a hammer. The light sweet crude does look like it's set to kind of bounce from here, but we still see 90 as massive resistance. So by the time you break the top of the candle and you start to run in resistance, there really isn't a whole lot of room to go. More interesting would be a break of the bottom of the candle, which would be a massive failure, and of course we have much more room to the downside at this point. We see the range holding, so just because of that, we're not willing to buy. We're going to have to pass on this potential bullish setup just simply because the 90 has to be broken above. And we see the range as 75 through 90 still. Of course, if we get a daily close above 90, that would change our opinion altogether. Looking at the Brent markets, you can see that a little bit different story, very similar setup. Of course, in Brent, the one advantage that the Brent market has is that 115 is a little farther up than our setup in light sweet crude. We did get the same hammer. It's not quite as perfect of a hammer as the light sweet crude was, but it is from an area 107.50 that does produce some support. So having said this, looks like we've got about $5 to run if we can break the top of the Thursday candle in the Brent market, and it wouldn't be surprising. It still would be staying in its somewhat range-bound conditions because the range is so wide at this point in all oil markets, not just light sweet crude and Brent. So having said that, we are bullish. If we can break the top of the Thursday highs, we think that we could take this for a trade, not an investment, but could probably pick up $3, maybe $4 on the contract.